here is part one in how you can save and of course maximize your tax liability for 2024's tax season coming up. Having a traditional 401k account or even a Roth IRA account can definitely help lower your tax liability for the new and upcoming tax season in 2024. Even though both are very similar when it comes to contribution and everything, but there are certain qualifications that you need to make sure you qualify for when it comes to contributing to either one account. So just make sure that you are reading the guidelines. They do change every year. So I do know for a traditional 401k account, you usually have a limit, a contribution limit. And right now that limit is around $23,000 of a contribution limit, and then also if you are over the age of 50, it can go up as high as $30,500. Now, the only difference is with having a traditional 401k account is that you'll be paying taxes on withdrawals in retirement at an ordinary income tax rate. Okay. The biggest benefit in having a traditional 401k account is that it is made with pre-tax dollars, meaning you lower your taxable income in the year you make the contribution. Now, for a Roth 401k account, this one is made with after-tax dollars, meaning you won't owe taxes on qualified withdrawals in retirement. Now, the biggest thing with having a Roth IRA account as well is there are income limits when it comes to having a Roth. So you want to make sure that you're not over exceeding as a single filer. For example, it looks like the income limit for a single filer in 2024 is around $153,000. So you cannot exceed over this amount and you will be ineligible to have an account, well, a Roth IRA account. But if you're below that limit, then it is best to just to have a Roth IRA account, of course, because the contribution limit for 2024 is around $6,500 or $7,500 if you are over the age of 50. Now, another type of account that you can also look into is a 403b retirement savings plan. And this is usually designed for employees of certain public sectors, such as nonprofit organizations, such as schools, hospitals, and religious groups. So it does operate similar to a 401k, but it is only, of course, available to those specific workers. So just make sure if you do disqualify for whatever reason for a traditional or a Roth IRA, that is another option for you if you do fall under one of those categories. Now, I know that was a lot of information, but I do want to just make it clear that the key benefit in comparison to both a traditional 401k account along with a Roth IRA account is a traditional 401k is best if you want to lower your taxable income now and expect to be in a lower tax bracket in retirement, whereas a Roth IRA or a Roth 401k account is best if you expect to be in a higher tax bracket in retirement and want tax-free income later on.